Yours is me. I'm here. Donna Egan.
I'm here.
Greg Oliver. Here. And Tim McGrath.
Here.
Okay. Tom usually skips the pledge of allegiance. We'll do that at the other meeting. Any public comment? Anybody that wants to make a public comment, there's 3 minutes. 3 minutes. Got a public comment?
Motion to adjourn.
Okay.
Yeah.
Okay. The first thing on the agenda after that is the approval of the minutes of the audit committee meeting, March 29th, 2022. I wasn't there. Donna wasn't there. I don't know if we should wait or abstain. I don't know usually what would be the procedure.
You can vote on them.
We can vote on it. I thought so. All in favor, and the minutes of February 6th, 2023. I hear a motion to approve them.
Can you do them one at a time? Because I'm gonna.
Oh, okay, sure. The first one, March 29th, 2022.
I'm gonna make a motion.
Okay, I'll second it. All in favor? Aye.
So I'm abstaining.
Are you gonna abstain?
I'm
Okay.
abstaining.
Well, that doesn't carry. Okay, that's fine. And now we got minutes of the audit committee meeting at February 6th, 2023. All in favor, or do I hear a motion to accept them? Okay, I second it. All in favor? Aye. Okay. So that's passed. Okay, now we get to administrative matters. You report with Teal, Becker, and Chiramonte.
Your show, Emily.
Thank you. Hi, everyone. My name is Emily Salingo. I'm a manager with Teal, Becker and Chiramonte. And also joining us is Vince Camiso, who's the shareholder on this account. We've both worked on this for a couple of years now together. And we just wanted to thank Tim and his team for all of their help during the audit. It's always great working with them, and we especially appreciate Tim's preparation with the financial statements. It's extremely helpful for us in finalizing the audit. So can you see my screen okay, this independent auditor's report?
Yeah, and we have it on the wall too.
Okay, great. So we'll first start off just reviewing the auditor's report. It's a couple of pages long, but this first paragraph here is our opinion. So similar to previous years, we've issued an unmodified or clean opinion on the financial statements, which essentially means we did not find anything during the audit to cause us to modify our opinion of the financial statements. There were no material misstatements, errors, or any other concerns that would cause us to deviate from that opinion. Starting here is the management's discussion and analysis that Tim prepares. It's really helpful, and it allows readers to gain a really good understanding of the agency, its programs, and it also gives some good high-level financial summaries here that we'll get into in a little bit more detail. But it just provides a nice overview of what happened during the year. It's a nice way for readers to get a good summary of that information. This is the statements of net position. This statement is providing a snapshot of the agency's assets, liabilities, and net position at year end. It's going to show the readers of the financial statements the assets here that are available to the agency to fund its operations, how much the agency owes to vendors and others, and then the net position down below that's available to the agency for use. So there's just a couple of high-level points we wanted to review. First, this line here, cash and equivalents. We just wanted to note that there was a decrease from the prior year of about $409,000. That's mainly just due to the purchase and investment of the capital assets of $1 million during the year. And then that's also offset by the increase in net position that you had, and then just overall timing fluctuations as well. The next line is the receivables. Your accounts receivables here have decreased from the prior year, approximately $461,000. And that's really just a function of timing of the receipts and collection efforts being good. So that's good that that, decreased. Then down in the non-current assets section, we wanted to point out this net pension asset for the employees' retirement system, the ERS. So this year, this is actually an asset of $597,000. In the prior year and many years prior to that, this has been a liability. You can see down here, it was a liability of $7,000 this year. So this is really a result of actuarial calculations and assumptions that fluctuate each year. And this calculation takes into account a lot of different factors and market value assumptions. That's all done by the state. But essentially, this number is going to fluctuate depending on how well funded the state's plan is. And in the current year, the plan was overfunded. It was a little over 103% funded, where in the prior year it was 99.9% funded. So now that that's overfunded, that's actually an asset. So this just means at this point in time, that's less of a potential liability to the agency. So that number will definitely fluctuate in the future. That could go back to a liability, but this is consistent across the board at other municipalities and clients that we've dealt with. It's fluctuated this way since that plan is overfunded. But again, that can flip-flop year to year, just depending on all those different factors. But we did want to point that out just because that'll be a little bit different. In the non-current liabilities section, long-term debt continues to decline with the payments and no new debt. Also, the landfill post-closure care liability continuing to decline as you're well into the post-closure period. And then lastly here, the net position section. So overall, the net position has increased about $396,000 from last year. So that's increased your total net position to 16.1 million. We'll review some of this in more detail on the next page, but this is really just a result of the increased volume that drove that up, offset with fluctuations and other increases in expenses. So on the next page is the statements of revenue, expenses, and changes in net position. You can see overall the revenue has increased, which is a result of the increase in volume. You can see the solid waste service fees have increased approximately $1.5 million. That's a big factor in driving that total operating revenue up this year. And then last year, there was this landfill post-closure care costs of approximately $420,000 that was picked up as a revenue. And this year, that's gone back down to an expense of about $222,000. Now, this can fluctuate between being a revenue or expense item. It really just depends on the change in the liability of your post-closure care. And that's driven by the landfill expenses during the year, which from 2021 to 2022 have increased. And that's what drove this to go back to an expense account here. So just wanted to point out that difference. And then your total operating expenses also increased by approximately $1.5 million, which is due to this landfill post-closure care costs, and then just overall increase in volume as well will drive this. Specifically, there were the contractual increases for transportation and disposal costs. So these rate increases in the volume were the main drivers in the increase in that as well. So overall, this will show you your increase in net position number, that 396,000 we just looked at on the previous page. And this brings you to your end of year net position of a little over $16.1 million. Besides that, there really weren't any major fluctuations or differences on those two statements. And the last statement here is the statement of cash flows. So this net cash provided by operating activities here, that's a good indication of the cash flows purely from an operational point of view. And that number overall was a little over $2.3 million. So this is purely your receipts from services provided and then your payments to suppliers and employees. And then also wanted to point out here in the capital and related financing activities section, this is the purchase of the capital assets of a little over $1 million. So that's that investment in various pieces of equipment throughout the year. So what this statement will show you here was the overall change in cash, and then it will show you the end of the year cash balance as well. Does anyone have any questions on the statements that we just went over before I go into the footnote section?
I have a question, but it might be more for Tim than from the auditors is, how come we have a net revenue on the post-closure costs? I can't understand that.
It's based on an estimate.
Okay.
Estimates. Cost.
Mhm. Okay.
So it's.
Okay, so it's just.
Sorry, I couldn't really hear everything. Was the question answered? Sorry, I couldn't really hear.
Sorry, I did. No, she had asked about the fluctuation in the post-closure care costs, and I just
Yeah.
explained that it's an estimate and it's usually driven by the leachette, which is based
Right.
on how much rain we get.
Right. Right. So in the footnotes section, there weren't any major changes here, no new accounting standards or anything like that. So everything's pretty comparable, but there's just a few footnotes I just wanted to point out. I think they're always good to take a look at, and they provide some good detail. This is note 4, capital asset activity. So this does a nice job breaking down just into further detail the capital asset activity that occurred during the year. So here you can see all of the additions that took place. The majority of that was the machinery and the equipment. It will show you any disposals of assets, and then it will also break down the depreciation amounts here. So what this will do is total down to the capital asset number that was on the statement of net position. And then I also wanted to go over note 6. So this is the employee retirement system, the ERS information. And it goes through all of these different market value assumptions and all of those different fluctuations during the year. But I just wanted to show you the piece that shows the total employees retirement system as a whole for the state. So this shows you that overfunded number of over 103%. So that's why your portion of that has gone to an asset this year. But again, that could, it will fluctuate. It just depends on all these different assumptions that are all disclosed here that the state and their actuaries come up with. And then note 11 is the contingencies. This reviews the landfill closure and post-closure care costs. So this will just kind of break down a little bit more some of those annual costs that are used to come up with the total liability number, as well as the current portion. So there's 6 years remaining here, and the expenses increased from about $217,000 last year up to this $249,000. And that was really just due to the Litchett disposal and then some increases in the facility maintenance at the Ulster landfill. So overall, what that's done is increased that or changed that to an expense this year. That's fluctuated. Note 13 does a really nice job explaining all of the different grant funding sources for the agency. It gives a good summary of each, as well as any revenue recognized or what was received during the year. Does anyone have any questions on the footnotes?
Nope, we're good.
Okay. All right, next we'll get into some of the letters. So this is our report on internal controls. And basically what this is saying is noting that during the audit, we considered the agency's internal controls over financial reporting when we were planning and performing our audit, but we're not issuing an opinion over those controls. We just reviewed all of the different internal controls and incorporated that into all of our documentation and understanding and testing. And we had no issues with any of the internal controls or any of the testing that we did. And then this is a required report for the state related to investment guidelines for public authorities. So here we're just noting nothing came to our attention that would cause us to believe that the agency failed to comply with the agency's investment guidelines for some of those investments that you have, the guaranteed investment contracts. And then the next item we'll review this is called the letter to those charged with governance. So this is our letter as the auditors to you, the committee, those charged with governance. We're basically saying here what our responsibility is as auditors, and that's to express an opinion as a result of our audit of the financial statements. We're also listing management's responsibility here for designing and implementing internal controls. And this is also where we would communicate with you any significant issues that we had during the audit. And we did not have any issues with management, and we did not have any material adjustments to the financial statements. We did have two, it's called a past adjustment. Basically, these are not material misstatements or anything like that. But this is a recurring past adjustment here. This is just related to the grants and when the receivables and revenues are being recorded. Basically, the agency reports these grant receivables when the reimbursement from the state is known and likely to occur. So this is just the agency basically fully allowing for those receivables, like an allowance there, being conservative since the state can take a very long time to reimburse these funds. This is just our way of keeping track of that difference in the timing and the reporting. And then the last one here is a new government accounting standard. It's called GASB 87. It's related to leases. Essentially, what this would have done is put your leases on your statement of net position as an asset or a liability. But because these are not material and, we were able to record a past adjustment for that. It's just a couple of small leases that the agency has. And this is something that we'll continue to monitor going forward and track this. And if it ever became to a material level, we could definitely implement that and record it. But for this first year, we're able to pass on doing that. And then lastly, we have the representation letter. This just outlines management's responsibilities over the financial statements. There's no changes here in disclosure or anything. It's just all standard wording as in prior years. And then this is the letter that we will need signed by, I think it would be Tom and Tim. And this is what we'll need in order to issue the final financial statements. Everything else for the audit has been wrapped up except for a couple of legal letters and inquiries. So thank you again, Tim, for all of your help with everything. Getting everything wrapped up. That deadline can come very fast.
You said, Emily, you said that you need the representation letter signed by Tom as well as chair of the audit committee.
Yes.
Okay, then so that's new because I think only I've ever signed that.
Right. That's why we'd like both of you to sign, like how we had to change with the engagement letter being signed by Tom instead. There's just really a push for it to be someone on the well, really the chair of the committee. But we felt, you know, since you're preparing the financial statements yourself, it would make sense for you to continue to sign that as well, the representation letter.
Sure,
In
and
addition to-
I understand what's written in that letter. A lot of jargon, so.
Yeah. Yes. So does anyone have any questions on all of that? I know it was kind of a high level overview. But we just wanted to point out some of the big fluctuations and really important numbers. If anyone has anything.
A learning type question, and I'm not sure who to direct it to, but you mentioned that the agency has investments. How does that, give me 2 seconds, a story about that. How does that work? There's investments.
Are you talking about the report that they mentioned? Yeah,
Mhm.
that's an authority budget office requirement. You'll see that when I send it out. Next week, I'll have all those reports done. So they require an investment report that we draft up on our end, basically saying that we're in compliance with our investment policy. And then the other side of that is I also need this letter from the auditor saying that they looked at that as well. Not much, because you can't, yes, yeah, we can't get very risky because
Right.
it's not necessarily our money, right? It's not my personal money I'm investing where I can decide if I want to get, really risky. I could throw it all on the college basketball games tonight. But our agency, municipalities and all that, they have different rules and they need to limit their risk because it's public funds. So you can't really mess around with that. The riskiest you can kind of get is CDs. No, actually, our investment, if you were to look on our financial statements, the investment line is tied up in debt service. So it goes back to 1993 that money's been invested in. Because it meets the criteria for being displayed as such.
How does that?
They're asking about the pension. Basically, we're part of New York State Employees Retirement System. Based on what tier our employees are in, they make specific contributions that are withheld from their paychecks, and we forward along a report to the state through their reporting system. And then once a year, we actually have to make contributions based on whatever the percentages that the state came up with and what the salaries are related to each separate tier. So for instance, right now we have tier 4 and tier 6 members. Contribution rate is different and the rules have changed for each of those tiers. So we make that payment. But on top of that, for reporting purposes, the footnote that you see and the line items on the balance sheet, those relate to our share of the fund as a whole. What was it, 103 million, 100 billion?
Yeah, it's massive.
So our percentage share of that is like 0.0007% of
This
so
is in millions here.
that is the fund essentially. Yep. And oh yeah, the state's money that's what they do with that pool of money is invested. So we do not hold it here. No, correct. But we're required to report our share that we have, essentially, for lack of a better term, invested into that system. Yep.
Right. So all of the other municipalities, their footnotes will look very similar to all of this. They report all the same information. This is all like the state's fund investment information, all of these different market assumptions. But this is really the driving factor here. What's the total liability, net position, and then what's funded, and then that really impacts how it's reported on your statement of net position.
And Tim, just to kind of piggyback off of your point and Emily's point, with the way the market's gone, you know, calendar year, now fiscal year, budgeting will be extremely important for you guys to continue. You know, sometimes in the summer and the fall, I think you can actually get like an estimate of what that once a year check will be. So I'd be curious as the year progresses, you know, your share of that, is that going to be spot on to your budget? You build in some conservatism, just because as things get worse in the market, the payment amounts go up. And so we'll see where that falls next year. And just while there's discussion on this, the chart that Emily has that says F, pension plan fiduciary net position, the plan itself is a separate entity that has its own audit that's, you know, presented, and information is given to the state that we utilize. But there is, I think it's KPMG, right, Emily?
It is, yes. That does the audit.
So that plan and retirement system is its own entity that we're reporting kind of your share of it.
Yep, and the way, just so everybody's aware of what he's talking about as far as budget, usually the rates are released sometime around when we're doing our budgets. So if it's going to be something material, you know, I'll make a change from usually we propose, or we agree and accept the proposed budgets in August so we can get them out to the towns per our contractual agreements. But we finalize it in October. So I usually have rates so that I can get a better idea of if my estimates back in, you know, July and August were off or not. So. Any other questions? You guys got anything else?
Tim, not really a question, but just to supplement as we wrap up here, you know, we really thank you and your team for their dedication, like Emily said, and also you guys as the audit committee and the board. We had a kickoff meeting, our first day of field work in February, which really helped. We know there's some new faces this year, and whether it was on site or those of you called in, you know, that really got us going with what to be on the lookout for. We were able to get some questions answered and really make our audit efficient. And, you know, with a couple month time frame to kind of get information in, started, audited, and filed next week by the 31st due date, which comes up quick. You know, we appreciate all the efforts. We're right on track. What we're going to do is get this ACFR and financial statement package through our pre-issuance process first thing next week, if not Saturday. And that'll give us a chance to work with Tim to put the finishing touches on this so he can issue by next Friday. And, you know, logistically, once we get the representation letter signed and dated by both parties on your end, we can go ahead and stamp everything final and issue it. As far as resolutions, you know, maybe changing things up a bit on your end, you guys can maybe make one tonight if you'd like, you know, pending final approval, or something get documented in the minutes. I mean, however you want to do it. Sometimes we've met with the board after the 31st of March, we issued and then we presented. This is actually working out, you know, things were ready, so we're able to do it, and everybody's schedules allowed for that. So we'll kind of sit back and let you guys, dictate how you want to do it. But that's just some housekeeping matters as we head for home to the finish line.
Hey, you're talking about a formal resolution to accept the draft audit report?
Yeah, we've seen that work for some other municipalities that we do, but again, it's however you guys want to do it. Is it outside the audit committee? Did the full board see it? Just somewhere in the document, auditors presented and everybody unanimously approved, but that's up to you guys.
Yeah, we've always just run it through the audit committee.
Good.
Totally up to you guys. Mm-mm.
We'll figure that out. Thank you.
Tom's not here. Gotta sign papers and stuff. Okay.
Yeah, they're gonna wait for the full board.
Was there any, no old business, no new business?
I have no old business or new business.
Does anybody want to make a motion to adjourn? I'll second it. All in favor? Aye, we're adjourned.
Excellent. We're all set. Thank you, Emily and Vince.